Okay, so yo guys, so welcome back to the channel. So in today's video, we're talking about TTCF. So a report came out 2 days ago whereby an analyst maintained a hold rating for this stock. But yeah, in this video, we're going to talk about the analyst hold rating as well as the price target set. And also we're going to talk about why I'm still loading up on this stock. And also we're going to talk about where I see the stock going in the next year. But yeah, before we get into the video, please check out our content. If you like the content, then please help us get to 1,000 subs by subscribing down below. Don't forget to give this video a thumbs up. So we make investment videos talking about stocks in the stock market such as Tesla, Workhorse, you got Hyrion, you got Nordstrom, you got Apple. So yeah, follow the million-mile journey and we'll help you do well in the stock market. But yeah, let's just get into this video. So a report came out 2 days ago, so on December the 3rd, whereby a Robert Dickinson from Jefferies maintained a hold rating for TTCF and set a price target of $17. So the company's share price closed at $15.69 as of Friday. So this is very close to its 52 weeks all-time low, which is $14.09. So it's only $1.60 off. So even despite this and despite the low price target, this still shows that analysts still feel that this stock has potential to grow, even if it's just by 8% from this $15 cost base to the $17 cost base. But yeah, this just further goes to show how undervalued this stock is. But even despite this analyst, the general consensus of analysts do believe that TTCF is a moderate buy and has a low price target of $17, a high price target of $26, and an average price target of $21.50. So this is still a 37% increase from its current price, which shows a huge growth potential in this stock. But if I've learned anything from this year in the stock market, is that analysts are not always right, and that's the case for majority of the time. So this $21.50 average cost base or average target, I feel like this stock will exceed it easily in under a year. But yeah, so over the past week I have been loading up on this stock. So currently I have 215 shares, which is spread over 2 portfolios, and I hope to get this to 250 or maybe even 300 shares. And right now, as long as it sits in this $15 cost base, I will still be buying. For me, anywhere below 17 is a buy for this stock. Like I've said in previous videos, I see the stock doubling to that $30-40 cost base in under a year. But yeah, let's just get into why I'm still so very bullish about this company and I see the huge potential. So first of all, let's talk about the revenue from last quarter. So the company has an increased revenue of 65% year over year, and which made up 41 million in revenue, and the branded revenue hit a record of 22.6 million, which shows that sales increased 288% year over year. Then also this company also plans to push their e-commerce and online presence, and basically taking advantage of the current situation, the COVID situation, which only makes sense. So instead of having to buy the product in retail, they're going to make products available online, so you'll be able to purchase it online and straight to your door, which only makes sense. People love the product, so people will still buy it in store, people will still buy it online for convenience. And additionally, the company currently sources all their products from Italy and California, so that's where their factories are based, and the capacity for both of these facilities have increased more than 50% in 2020, and this will continue to increase in 2021 as they push into that e-commerce business and to that online presence. And also there's also plans to potentially expand into Europe, so such as the UK, and this is very feasible because they've got their factory in Italy, which is in the EU, so they can easily supply products to EU countries, even start off small and continue to expand. So this is a company that has huge growth potential and wants to continue to grow in 2021 by pushing their products into more retailers, so into more Walmart stores and Target. So as of now, their products, I believe, is in 50% of Walmart store, which is increased from 7% in 2018 to now 50% in 2020. 2021, this can go up to 70%, and eventually it will be in 100% of Walmart store. So this shows a huge growth potential, and they also want to expand their product in Target. So this company has such a huge growth potential. So you've got their e-commerce business, their online presence, you've got their in-store presence, so increasing the amount of products in the stores such as Walmart and Target, and you've also got the possible expansion into Europe. So this is a company that has such a huge growth potential. So right now, I keep saying this, the stock price is undervalued, but I'm not complaining because this just means I can take my time loading up. So day by day, week by week, I can keep buying more of this stock, and that's what I've been doing for the past week. And now I have 215 shares. I'm still gonna keep buying. So whenever I get money, I'm still gonna keep buying and adding to this cost base, because when it takes off and this stock hits that $30 cost base, I'm gonna regret not buying it now. And for many people who are probably waiting, maybe because over the past week or two it has been at this $15 cost base, this is what being an investor is, taking these opportunities. If you're waiting for this stock to make moves and maybe get to that $16 because you're not sure which way it's swinging, then you clearly haven't done your research and due diligence. So in that case, you shouldn't even be investing in the stock. But yeah, don't wait for the stock to shoot up and follow this FOMO, fear of missing out, before you buy into it. You want to get into it early when it's down, then hold it and wait for the stock to bounce. Because like I said, I see the stock going up 100% in under a year. So I'm very, very bullish in this company, because eventually you got people from Wall Street, analysts, big investors are going to clock the potential in TTCF. But you want to get into it early, now that no one's talking about it, no one knows about it. The cost is down to $15. You want to get into it now, instead of when big YouTubers or big analysts or big investors start buying it and this stock price shoots up to $20-25 and you're having to buy that high cost base. So yeah, so this was just a quick, well, I hope it's quick, but yeah, this is just a quick video. We've got a lot more and much more detailed video on our channel, so check that video out. But yeah, like I said, guys, help us reach 1,000 subs by the end of the year by subscribing down below. Follow the million mile journey, and yeah, we'll catch you in the next video. Thank you for watching.